Hi everyone, my name is Hilton. Welcome to season 2 of Market Views. Today I'm joined with Rufaro. Hi Rufaro.
Hi, Hilton.
As we start the new season, the season 2 of Market Views, I'm just going to start with a rundown of what happened on the stock exchange in the first week of May this year. We have the OSHE. Notably, before we start, we can just to let you know those who are not well informed. The market did a bull run in April with the OSHE going up for the whole month. The market was up every day since the beginning of April to the end of the month. As we started May now, we see the market is down. OSHE 4.1%. The top 10 is down 3.95. The top 15 as well. All the major indices are down in the first week. And notably, we had 4 trading days in this week, but we're seeing quite significant drops in, in in the value of the major counters. Notably, we have the small cap up, which is something we are now accustomed to. Whenever the ocean and all the other indices are going up, the small cap is going the other direction. So, Rufaro, do you have anything to add with this movement on the market?
Okay, yeah, thank you, Hilton. So, like you rightfully mentioned, there is usually a negative correlation between usually the top 10, which constitute about 80% of the market, and the small cap indices. But more importantly, to try and explain why we are seeing this correction on the market. So, usually when prices go up, like you said, there was a bull run which had been going on for about 6 weeks, and you would expect a correction whereby investors are now taking off their money from the market. Yeah, so there will be a profit taking happening. So as they are exiting the market, you expect prices to retrace and go back, because if you had been in the market for that time when there was a bull run, when you exit, you usually don't mind taking a haircut. That means selling off at a quite lower price as you want to get off the market. But it's also quite important to notice that this is the same week also where we have had the announcement of the trading curb, what they call the circuit breakers. And you would expect some of the selling to be associated with some panic selling. You know, investors really don't like any changes in terms of be it law guidance in terms of on the market. So you'd expect that each time they come in introduction of anything of some sort, you'd expect others to say, oh no, I'm now exiting my position. So it's a combination of both. But I would have expected the market to retrace by something more than just 4%, considering it had went up, I think in one day on a Tuesday, went up by 12%. I would have expected that it would have retraced by more than just 4%. But it just shows that as there is profit taking happening, there's still liquidity in the market, and there are still others who are willing to get in.
Right. Thank you. I just to note, it's highlighted that the small cap was up. We have National Tire Service leading the week, top price at about 24.9%. However, the value trade is about 76,000, which is quite insignificant, considering about 1.6 billion traded over the week. So we also have Hippo, which traded 79 million, and Zimplo also traded about 52 million the whole week, gaining 14%. However, something to note is on the fallers. We have counters which have been going up for the whole year. We have Axia, we have OK. These are companies which are in the top 10 year to date currently, and I think Axia is up more than 500% year to date. And we see it dropping 16% in a single week, trading about 19 million. Do you have anything to add on the folders?
Yeah, especially Axia. It was bound to happen, and it had to retrace, because Axia, forget Zeko, I think it is still the best performing counter on the ZSE, up there with Simbisa and INSCO. So you would expect, like we're saying, investors to be taking out their money from a counter where they've already profited already. The one that's interesting is OK Zimbabwe. You know, OK Zimbabwe is always my favorite. And from studying OK Zimbabwe, you'd know that if OK Zimbabwe goes up, it's bound to come back and retrace. It used to have a resistance level around $30, where you'd know that it won't go above $30. Each time it tries to get to that, it would come back, but it did now past that, and it seems 60 bucks is now the new resistance level. So everyone who's been studying companies like OK would know that it's bound to happen, and there was no surprise there. Probably what's just interesting to note is that there were significant volumes. 133 million for OK was very significant throughout the week.
And also on the top fallers, we have General Buildings, which traded about 15% of the listed securities last week in a block deal, going down 13%. I think it's something we've seen in the market. Whenever we have these negotiated deals or these block transactions, the counters usually go down. It's rare to get it going up. So it's something we look forward to. However, talking about where most of the value is going, where the money is going, we have the top 10 by value. The top 10 counters traded over the week by value. As I highlighted before, we had about 1.6 billion traded over the week. However, also to note, we had a short week, as I said before, we had a short week of 4 days with Monday being a holiday. We have leading is usually Econet, and same as this week, trading about 25% of the total value traded over the week in one counter. So I think just to note that these counters we have, these are the main counters. You find these same counters on the top 5 year to date. You find these same counters in almost every transaction. So what is it? Or what do you have to add on this? And maybe just to give us, why do we see there were about 92% of the market being controlled by only 10 counters?
Okay, so it's important to understand why people prefer to put their money on the Zimbabwe Stock Exchange, especially in an environment like this where there is high inflation. So one of the reasons why you would want to put your money on the Zimbabwe Stock Exchange is to preserve its value. So how do you do that? You want to get into a counter where each time you want to exit your position, you will be in a position to exit your position.
Yes.
So if you have 100 million and you are getting on the Zimbabwe Stock Exchange, it's very rare that you get into these small counters. That's why you see most of the activity happens on the top 10 by market cap. Maybe they can get to top 15, but the small caps. That's why you noticed that last year in 2021 there was an opportunity for the small caps to really grow that much, because most of the money doesn't go straight into them. Even when it comes to research, nobody's really interested in covering them to see what exactly they are doing. So there can be opportunities for difference between the real value and the actual price in terms of those. But yes, it's important to note that usually it's your Econet, Delta, INSCO. Those are the ones who usually lead in terms of top 5 by value. That's where most of the money goes. But Tanganda is interesting to note that last week contributed about 16% of the market. As you know, Tanganda came back from its partnership with Mikos early this year, and it's now part of the top 10 by value, and we're seeing that significant volumes are also traded in Tanganda. So yeah, there seem to be quite excitement in Tanganda. You know, I have bearish sentiments towards Tanganda, but it seems like the market is interested. Even when you look at in terms of the foreign sales, you're likely to see on a daily basis that Tanganda is appearing there.
All right. is related on the issue of liquidity. I think that's the main reason most people invest on the exchange to preserve value and maintain their liquidity. However, we see the central bank coming in, giving us different regulations on liquidity. We saw the circuit breakers. We are seeing now with the new
Capital gains.
is capital gains tax, exactly, with the new capital gains tax. However, moving on from that to our counter of focus today, as it be, and maybe just the whole banking sector might be affected by the suspension of lending to banks, or are they affected in any way, or if so, to what extent? Can you just give us an overview of maybe with the suspension of lending by banks, be it to private and to the government, and how this might affect the banking?
Okay, so I think I will start off with the one on capital gains tax. I think we should probably just explain to our viewers what really happens. So there's something called capital gains tax, and like the name says, it's charged on capital appreciation. So if you get on the Zimbabwe Stock Exchange, buy a share for $1 and sell it for $2, you are charged on the difference, that's the dollar. So the capital gains tax was 20%. But what was happening, there is then something called capital gains withholding tax. So if you are somebody who doesn't have tax clearance, you don't file for tax, you are then charged this thing called capital gains withholdings tax, which was it which it's still, we haven't had any update in terms of our capital gains tax, which is still at 1.5% of the selling price. So there's a difference. Capital gains withholding tax, it's on the selling price. So it's 1.5% if you have held the security for more than 6 months, and 2% if you have held for less. So, which means if I'm not filing for my tax, I'm charged the capital gains withholding tax. But if I'm an institutional investor, usually institutional investor, even retail investors, but I then file for my tax, if there's a difference between my capital gains tax and my capital gains withholding tax that I've been charged, I can then go to ZIMRA and claim the difference. So, but now the capital gains tax has been raised from 20% to 40%. So what that means is that if I buy shares today at $1 and they appreciate to $2, what I will gain in terms of return there will be the 60 cents, because the other 40% will have to be paid as tax.
Yes, however, also is related from, however, we have quite significant other charges. We have your brokers commission, we have the IMTTs, yes, so
ZSE levy,
ZSE levy, and whatever platform you're using, there's a platform levy for yes. So we are seeing quite a reduction in the gains on the market. But as you said earlier, we are still seeing a couple of people still taking profits, because we have if you made 500% gain in a counter, it's not much to lose.
Yeah. You are right there, especially if we're trying, because the reason why all this is happening is so that we are trying, by we I mean what the speech says, yes. We're trying to dissuade speculative activities on the stock market. That's why there is a time lag of 270 days. So the question really is, are we going to reduce that market volatility and speculative activities by this? Because if I get into a counter, I want to make sure that I get as much return as possible, because I would then have to pay some of the money in terms of taxes. So I'm not really sure if this is going to be effective.
I think is related with the capital gains withholding and the capital gains tax. Someone you have in a way an option to choose which one to pay. I would say, most people are not tax compliant, so you just let go of that 2% from your selling price. and go on with the business. However, now whenever you see that your withholding tax now is too much, I think this mainly also applies to those who invest significant values and quite sell when there's not much gain. You can now file for the capital gains tax, to pay for the capital gains tax and get your to be reimbursed whatever you paid before. It's also a way where we can see that maybe an increase on the withholding tax might actually dissuade people to file for these taxes, and maybe we can get more revenues coming in to the central government. And also the other issue I highlighted before of the suspension of lending. How do you think this affects banks? Then from there we can move on to maybe how it can affect the economy.
Okay, so traditionally the core business of banks is to get money from depositors.
Yes.
Then you lend it out to those who are in need of that money, and you make a profit from the difference between what you are paying the depositors and what you are getting from the borrowers. So, but in Zimbabwe, of late, we have seen somewhat shift from that traditional model. If we look at our counter of the day, which is ZB, which recently released their financial statements, in terms of their inflation-adjusted numbers, only 33% of their revenue was coming from interest income. So interest income, that's the money that you get from any lending activities that you get. And the chunk, which is 2/3 of their revenue, is actually coming from what they call non-interest income, the non-funded revenues.
Yes.
So it doesn't necessarily mean all the banks are going to die, but does it have an impact on the banking sector? Definitely it does. Because that 1/3 is still significant money for the bank. But more importantly, you know, these banks are a pivotal stakeholder in the whole economy, because you know there are companies that need that money from banks to facilitate their day-to-day runnings. You know, you're probably a company that needs short-term financing so that you can cover up something. You call your bank, they can lend you. Probably it's just overnight. So the moment you suspend that, then you suffocate the businesses. The one thing about this is that it was clearly highlighted that it's a suspension as they are doing their investigation. So we hope it will be a very quick investigation, so that that space could open up.
Yeah.
So it doesn't necessarily mean the banks are going to die,
Obviously, yes.
because we have seen that most of their expense, but it has an impact.
I think maybe going out a little bit, we're heading towards winter, when the winter planting time is coming, and this is usually subsidized by debt from banks. Usually we see such banks being pivotal in these activities. So you said we would anticipate the suspension to maybe not last for long, or also there's maybe a strategic way we can finance or whatever expense that
I hope it won't be that long.
But however, on the private sector side, we definitely, some business will be suffocated as well. I think that's all we had for this episode of Market Views. Thank you for watching. See you next time, and please share, like, and subscribe. Have a good day.